Most business owners are leaving serious money on the table, and the wild part is they don't even know it. Today, we're pulling back the curtain on one of the most misunderstood moves in the tax game: electing S Corp status. This is Edward verified, this is legit. And fair warning, my take is going to be a little different from what most accountants are telling you. We're not just talking about saving a few bucks. We're talking about a fundamental shift in how your business is structured, taxed, and positioned for the long game. Let's start with the catalyst, because the reason most people never make this move is simple. Nobody explained it to them correctly. The standard advice sounds like incorporate, pay yourself a salary, save on self-employment tax. And while that's technically true, it barely scratches the surface. Think of it like buying a Swiss Army knife and only ever using the toothpick. The S Corp election is a full toolkit, and most business owners are walking around completely unaware of what else is inside. So when should you actually start thinking about this? Around $50,000 in net taxable income, it's worth a serious conversation. By $100,000 in net taxable income, it should absolutely be on your radar. No excuses, no delays. Here's where the irony kicks in. The people who need this the most are often the ones working the hardest, grinding through revenue growth, and handing the IRS a massive check every April like it's some kind of annual tradition they signed up for. You didn't sign up for that, you just didn't know there was another option. Now, let's address the biggest misconception head on, because this is where most of the confusion lives. S Corp are not just about reducing self-employment tax, that's the headline, but the real story is buried in the strategies that come after the election. We're talking about accountable plans, which let you reimburse yourself tax-free for legitimate business expenses you're probably already paying out of pocket. We're talking about business reimbursements done legally and efficiently. Think home office, vehicle use, phone, travel structured in a way that holds up and keeps money in your pocket instead of the government's. Then there's layered tax planning, which is where things get genuinely exciting if you're willing to play offense. When you combine an S Corp with advanced structures, retirement accounts, real estate strategies, cost segregation, depreciation, the benefits start to compound in ways that most solo operators never experience. And underneath all of it is entity optimization, protecting your assets while simultaneously minimizing your tax burden, building a structure that works for you instead of against you. This is the difference between reacting to your tax bill every year and actually engineering a better outcome before the year even ends. Here's the historical pattern worth understanding. Every wealth building cycle has insiders who understand the rules and outsiders who find out too late. Most business owners are playing defense, waiting for the tax bill to arrive, then scrambling to find deductions. But the high-income business owners, the W-2 professionals, and the real estate investors who consistently win are playing offense from day one. Discipline matters more than conviction, and process matters more than timing. You don't have to be the smartest person in the room. You just have to stop leaving structural advantages unused while your competitors quietly collect them. The S Corp election isn't a magic trick. It's a decision to learn the rules of the game and use them intentionally. So if you're sitting anywhere near that $50,000 to $100,000 net income range, the question isn't whether you should be looking at this. The question is why you haven't started yet. And if the answer is, nobody walked me through it clearly, well, now you don't have that excuse anymore. The ones who build real, lasting wealth aren't necessarily the ones who earn the most. They're the ones who keep the most, structure the most, and make every dollar work harder through smart, legal, and intentional planning. That's not a secret. It's just a discipline most people never adopt. Whether you're a business owner trying to scale, a W-2 professional building on the side, or a real estate investor stacking assets, we can help you get started. And you can check out our links in the description below for real estate investing, home contracting work, and connecting with the right lenders.